My name is Ray Franklin. I'm the Senior Commodity Analyst for Energy Professionals. Today's video is a summary of our November 11th Energy Update, in which I'll explain why we believe the election of Donald Trump does not guarantee lower natural gas and electricity prices. Natural gas is the largest source of power for the generation of electricity. Therefore, their pricing is highly correlated, which is why we focus on natural gas in our reports. In our August 20th Energy Update, we said an administration more favorable to the fossil fuel industry could impact the start of a secular bull market lasting many years. But with today's prices below the cost of production and America's natural gas exports expected to continue increasing for the foreseeable future, supports our belief that we are in the early stages of a cyclical bull market, with prices trending higher for at least 2 to 4 years. Our premise was supported by the empirical observation that since 2000, when natural gas declined to where it is in 2024, it always preceded cyclical bull markets that trended higher 2 to 4 years, and it didn't matter who was the president at the time. Another factor supporting higher natural gas and electricity prices long term was discussed in a New York Times article released earlier this year, which said something unusual is happening in America. The demand for electricity, which has stayed largely flat for 2 decades, has begun to surge, and I quote, "Over the past year, electric utilities have nearly doubled their forecast of how much additional power they'll need by 2028, as they confront an unexpected explosion in the number of data centers, an abrupt resurgence in manufacturing driven by new federal laws, and millions of electric vehicles being plugged in. Many power companies are already struggling to keep the lights on, especially during extreme weather, and say the strain on grids will only increase." Close quotes. Although the new administration may attempt to curtail the swift transition to electric vehicles, the overall growth in power needed by electric utilities will continue to increase, which will support higher prices long term. But where will prices likely go near term? No one can forecast pricing in the short term with 100% certainty. But when I look back at President Trump's first election in 2016, I noticed several striking similarities in the energy market to his election in 2024 that may help guide us now. When President Trump won the election on November 8, 2016, natural gas supplies were near a record high of 4 trillion cubic feet, and natural gas closed at $2.63 per million BTU on Election Day. And as you can see from this chart, after reaching its spring low, natural gas trended higher into Election Day. Now, supplies were near record levels, and President Trump promised to institute policies to increase production, and most believed prices would have to go lower. But surprisingly, natural gas rallied into the end of the year, closing at $3.72 per million BTU. And as we observed in the long-term chart we looked at earlier, during President Trump's first administration, natural gas experienced a cyclical bull market, and the average price of natural gas was much higher than it was on Election Day. Now, why was the average price of natural gas higher during President Trump's first administration? In our February 19th Energy Update, we pointed out when natural gas declined to unsustainably low prices below the cost of production, the average price was always higher long term. We also said the longer prices stayed low, the higher they would go later. This is a byproduct of the weaker companies being forced out of business, thereby decreasing competition, and the surviving companies are highly motivated to increase prices to make up for lost profits accrued while prices were low. The question is, are there similarities to where we were on Election Day 2016 to where we were in 2024? Yes, there are. Similar to 2016, after reaching its spring low this year, natural gas has trended higher and closed at $2.67 per million BTU on Election Day. Also, similar to 2016, natural gas supplies are again near a record high of 4 trillion cubic feet on Election Day, and natural gas is trading near the same price it was in 2016's Election Day, $2.67 versus $2.63. And it is understandable why, similar in 2016, you may hesitate reserving natural gas and electricity at this time, believing today's near record levels of storage and President Trump's energy policies will result in lower prices. But based on what happened in 2016 and the empirical observation that since 2000, when natural gas was as low as it is in 2024, the average price was always higher for at least 2 to 4 years. We believe it is wise to reserve energy now and not wait hoping for lower prices. Therefore, we recommend anyone with agreements expiring within the next 18 months take advantage of today's low natural gas rates, which based on long-term historical data will likely be lower than where the rates will be and expected to be at least through 2025 and beyond. Now, not every client's risk tolerance and hedging strategies are the same, but the goal of our reports is to reveal your risk-reward opportunities. We invite you to call one of our energy analysts to help you plan a hedging strategy that would be appropriate for your situation. And until my next report, please take care.